Evening, everybody. It's 5:30, and this is your closing comment, video number 1449. So, if you had any question about whether this was a bear market rally, today was your answer. Clearly, the CPI numbers were the spark that lit the fire, but today was a massive liquidation day. Volume was higher. Dow closed down 1,276 points, or just under 4%. NASDAQ, the big loser, down 5.16%, or 632 and change. The S&P, I've never seen the S&P down 177, so that's a new one on me, 4.32. The small cap Russell's down 74.51, or 3.9, and the transports down 540, or 3.79. I think that the transports are pretty much a major issue, seeing as there's the possibility they're going on strike at the end of this week. And of course, um, there are remedies for that, like being reasonable, but my guess is that the one that's going to get chosen in the last minute, if they can't come to an agreement, is one that the House Majority Leader, Steny Hoyer, another Democrat with overreach syndrome, is talking about stopping the strike. That only works for a little while. It's proven over time that it has about the same effect as wage and price controls, i.e., it doesn't work. But today's market was pretty horrendous. I'm going to shorten tonight because there's not a lot to say other than to point out market internals were 8-1 to the downside on the NYSE. All of the Dow 30 were down, 3.5-1 on the NASDAQ. All the big mega caps were devastated. Apple, which was up 6 yesterday, was down 9.5 today, or 6%. Nvidia down 13.74, 10%. Meta, which is nobody's favorite here, but it was down another 9.4%, almost $16. CRM, Salesforce, looked like the best performer of the day. It was only down 7.5, or 4.6%. We have all of those. We have all of those companies that sounded great when money was free, and they, of course, also got crushed. The headlines continue to be Apple and Microsoft worst day since March of 2020, Nvidia and Netflix worst day from. Everything is a worst day from. And so I'm not going to go into all of those, but you get the general idea. The chart on the screen is what's at the bottom of all of this. This is the dollar. Started down, pointed out several times in the last day or so that we've had these kind of roughly $3 drops and a turn right back up. Today's drop was from a high of 110.78 to 107.67. Amazing. Almost exactly 3 points. Closing on the high. The only high close higher than this was 110.20. And that's certainly within shooting distance from where we are. The oil was kind of an interesting situation today. The government came out this afternoon and basically put an $80 bid under oil by telling everyone that if oil gets below 80, we're going to start buying it back for the Strategic Petroleum Reserve. So we'll see what happens with that. The gold was down 23.20. Bitcoin down 10%, over 10%. 20,240, down 2,215. As I said, the dollar was up $1.49. Bonds were down about a half a point. Nat gas actually was up on the day, happened late in the day. Silver, 1949, down 37. I'd really like to be a buyer there. But this is definitely one of those 3-day rules. It cost me money to try and trade the S&P today for a day trade. It cost me 50%. But again, position size being appropriate, I only bought two and I added to them down dramatically. And so it cost me 50%, but 50% was only $100, so I'm not terribly concerned. We did add today to the account, and we added one of the only stocks that was up on the day today, on my screen anyway, Starbulk. 21.23, up 29 cents. We paid 75 cents for the options. That's exactly where they closed, up a dime on the day. And the story with Starbulk is all of that coal that everybody keeps talking about that needs to go to Europe and Asia. Starbulk is a dry bulk carrier, and that's exactly what they do. Also, I posted a chart today on the Discord room about the Baltic Dry Index, which has reversed after being down 40% in the short term. So, if you want to look at some coal stocks, there are only three. There's Arch, ARCH, there's Peabody, BTU, and there's Consolidated Energy. And frankly, I don't have the symbol for that. So, I'll look it up for tomorrow morning's open. And that's about it, folks. It was a very, very ugly day. My personal opinion, I don't think they should wait. I think Sunday night they ought to raise rates a point. There is no reason why they have to wait for the next meeting. It's right around the corner anyway, and I think it would probably give the market a little bit of a kick in the ass initially. But the fact of the matter is, as you can see, before the CPI number came out, when people think that they're serious about it and that they're doing the right thing, the market goes up. So, you know, a little bit of doing the right thing would go a long way here, folks. All right, I'll be back first thing in the morning.